US labor market data surprised investors once again. The Nonfarm Payrolls figure turned out to be twice as large as the forecasts. As a result, investors turned to the US dollar again. In this review, we will talk about events that may affect investor sentiment next week. Next week, there will be a few important publications. On a Monday, investors will pay attention to a report on the industrial production in Germany, the main driver of the European economy. Analysts expect a 1% growth. Notably, the German industry has been in a recession for 3 months, slipping into the negative territory at the level of minus 2.1% on a yearly basis. Such statistics caused speculation about an impending recession in the region. However, everything can change if the markets see growth in the German industry production on a Monday. On a Tuesday, investors will digest the news from Australia, where the Consumer Confidence Index will be released. However, one should also pay attention to another release from the experts of the National Australia Bank. It will be the Business Confidence Index for September. Meanwhile, sentiment remains mixed in Australia. While the mining sector is critically pessimistic, consumption is picking up. Thus, the two trends in the key sectors of the Australian economy level each other out. Analysts predict that the pessimistic sentiment will prevail in September. As the result, the Australian dollar may face another sell-off. The European currency is likely to remain under pressure in the first half of the next trading week. On a Wednesday, the European Central Bank will show that its dovish step may bear fruit, as there is no need to raise interest rates as inflation is slowing down. Of course, it can be the base effect. In September, consumer prices increased by 4.5% compared to September 2022. Notably, prices rose at an annualized rate of 8.6% in September 2022. ECB governors are unlikely to speak about it as the European Union economy is having a tough time now and is struggling to cope with the high interest rates. As a result, the euro is expected to weaken in anticipation of the ECB's dovish move. The Federal Reserve could soften its stance, but it does not appear to be doing so. After all, the US economy remains resilient and with the stance with the high interest rates. Meanwhile, inflation is slowing down, the labor market is robust. On Wednesday, the country will release the Producer Price Index, which is likely to point to a possible change in the consumer prices. Most likely, the growth rate will remain the same or accelerate slightly to 1.8%, remaining within the target. On a Wednesday, the Federal Open Market Committee meeting minutes will likely tell the markets about the hawkish sentiment of the Federal Reserve and its intention to raise interest rates again by the end of the year. And then US investors may continue to buy the US dollar. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.